Good morning, traders. It is 9:02 Eastern on Thursday, the 7th of September, 2017. It's another Trader Bite. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The first thing I want to remind you of this morning is that it is the second Thursday or it is the Thursday before expiration, which means that it's rollover day for the U.S. equity indices. Treasuries, of course, rolled a week ago, but today I will be quoting December 2017, and so my information, my levels are likely to be different than yours. If you're still looking at the September contract, the difference between the two contracts, I posted it on Twitter. I posted the rollover chart on Twitter. The difference between the two contracts, December is trading at a discount to September, meaning it's trading lower than September by 1.75 points. 1.75 points. The Nasdaq is in contango. It's in its normal format in that the December is trading higher than September. That's how future pricing is supposed to be. The Nasdaq has a premium in December over September of 7.25 points. The Dow has a discount of 37 points, and the Russell has a discount of zero point 0.7 points. So going forward from today onwards, and people have conflicting views on this. Some people do not like to roll over until the volume rolls, until the volume rolls over, and others just roll with the exchange. I roll with the exchange. My data automatically rolls with the exchange, and to me, whether the volume has moved or not doesn't really make a big difference because the products are so incredibly tightly arbitraged on a calendar spread basis that they move in lockstep anyway. So over time, over today, we'll see more and more volume move into December, and by tomorrow, the majority of the volume will be in December versus September. But we have all of next week, which is rollover week, and notoriously um, edgy week to trade in. But it all starts today with the adjustment of the rollover. In fact, uh, I need to adjust my chart prices, which I have not done. Just one secundo. Negative, and the adjustment is 1.75. Negative 1.75. All right. Okay, so the market stance this morning, everything is positive this morning. The only thing that is down on my quote board that I monitor um, is the US dollar and crude oil. Crude oil down 28 cents, trading at 48.88, down 0.57%. The dollar's taking a hit again. Remember, this morning we had the ECB announcement. The dollar's down 77.78 cents or 0.84%. The dollar index is trading at 91.475, 91.475 on the ICE. The leader today is the euro. The euro took a spring forward and is up 1% or 125 pips, trading at 1.2043. RBOB is strong this morning. The DAX is strong. Gold is strong, but also the indices are just slightly above break even, unchanged this morning. So it's an interesting set of. We're coming into a morning that's basically saying that um, we are unchanged mostly, but we are undecided. There's a mixed bag here this morning. Let's as far as the news feed is concerned, there's a lot that went on yesterday. President Trump sided with the members of Congress that believed it would be wisest to extend the debt ceiling by 3 months. They also decided to go ahead and fund the relief for Hurricane Harvey for the folks down in Texas. Um, And so that takes the pressure off of treasuries this morning a little bit. We also got the ECB announcement, which came out at 6:45 Central, 7:45 Eastern. As expected, the ECB left everything unchanged. However, at 8:30 this morning, uh, uh, ECB President Draghi has been talking about their outlook. They reiterated that interest rates are to remain at the present level well past the end of QE. Reiterates that QE can be increased in size and duration if outlook worsens. So they're basically saying they're ready to act to support the euro. Um, as the euro has climbed quite a bit. Remember, the euro is close to parity a few months ago, and there's a lot that was said and continues to be said. I suggest you just get on the ECB's website and have a look at the comments there, or I think the video is still running. We also got initial claims in the U.S. Initial jobless claims came in much worse at 298,000 versus 245,000. Continuing claims came in slightly better at 1.94 million versus 1.95. We also got non-farm productivity this morning at 1.5% versus 1.3, and and that's really it. The rest is all has all to do with Draghi and the comments he's continuing to make. As far as what we are expecting going into today, what is left in terms of what's left, we have the crude oil inventories coming in a day late because of the holiday on Monday. We're getting natural gas at 10:30 today, and then at 11 we're getting crude oil inventories. Crude oil inventories expected to come in at a surplus of 2.5 million barrels versus a draw last week of 5.392 million barrels. Big difference there. Distillates are we're looking for a draw of 2.451 million barrels. That's the result of the hurricane versus a surplus last week of 748,000 barrels. Gasoline inventories, huge draw, 5 million barrels expected to draw in gasoline. So if we get numbers that are different, we're likely to see crude respond. At 12:15 Eastern today, we get U.S. Fed Speaker Mester. Also this morning, the uh, Fed chairman, who was the, oh my God, I can't find it. It's one of the Fed heads is leaving. Let me see what that is. I don't want to misinform you. Anyway, I can't find it. It's one of the Fed chairs is Fed presidents is leaving in October of this year, and there was discussion that Cohen would be nominated by Trump to replace him. I can't see that news flash on my calendar yet. Oh, there it is. Fed Vice Chairman Stanley Fischer is resigning October 2013 for personal reasons, and Trump is unlikely to consider Gary Cohen for Fed Chairman position. There's a potential change there coming. Not that that impacts things, but Vice Chair Fisher has been pretty vocal throughout the crisis that we had and the current recovery. And then let's switch gears now and look at what we had yesterday versus what was expected. Yesterday we looked at this big area, this big balance area. I talked about this also during last night's AMA on Futures IO. Quite a few people were on that webinar yesterday. It should be released in the next couple of days. I think many of you might glean a few things there that might be useful to you. But I talked about this. We had the run up, we had the pullback. We pulled back to the lower high volume node down here before we sprang up, and it looked to me coming into yesterday, it looked to me that there's a strong basis for a push down into support underneath, which shows up at 24.57.50 down to 24.56.50, and then I was looking for the market to turn up towards 2468.75 was a key area. I expected it to get tangled up and potentially run up onto the close. What we did is we pushed through to 2468, but we did not get the run up. We ran out of time. Sorry, my throat's really. The secondary hypothesis is an immediate push into that 2468 to test. Once we test that resistance, potential resistance area, we're likely to push down to 24.55. That's not what happened yesterday. Hypo 1 is what played out yesterday. Here's what it looked like. So our levels are going to be off between what I was just discussing and what the chart shows here, because this chart is adjusted to December. So we're looking at December here versus the trader bite, which was yesterday, was looking for September. So you add 1.75 points to this, which is the spread, the premium, 1.75 points. That puts you at 24.69 on the high versus 24.68.75 on the high. So we tested the MC point of control by a tick yesterday. We did end up dropping to 24.58, I believe. It was around 58.50, 24.58.50. It shows 24.56.50 here, but we got down into 24.58. We could not push down into the expected resistance area. The market preempted the move down. So we had, as expected, we had a lot of consolidation. Then we had our test lower. Then we pushed up into that resistance. Let's see if these have been adjusted. I don't know if they've been adjusted or not. And so these have been. So we've had the exact play that we looked at on Hypo 1 there. And then the overnight session. Now I got to fish for the overnight session here. There it is. The overnight session. A quick sell-off came in yesterday. I looked into this. I wasn't sure why it is that we had this splash down to 24.55.75 on the December contract. But we had a quick sell-off, and it looked like news to me because the market came right back to the SOC, to the scene of the crime, and basically went sideways until the European Open, at which point we started to rally up. The formation we have coming into today is a classic push pull and then continuation. That's what it looks like right now. So I'm expecting overall, I'm expecting the market to continue higher. Inventory is fairly balanced. Inventory is fairly balanced here. And the delta is actually slightly negative. However, be careful looking at delta in December, as it does not, we don't have the volume to support it. So from today through expiration next week, the delta is going to be misleading. You almost want to remove it from your charts. But overall, the market is fairly balanced. This morning, I'm not expecting it to drop prior to pushing higher. I'm expecting a choppy open. We're opening right in the yesterday's range. We are opening right inside of the MC value. So if we include yesterday's trading, you can see where we're filling in here. We filled in a little bit the LVN right here. That was a key area. We filled that in a little bit. You see how it's coming off? See how it's rising? Filled that in a little bit. And then we started to shift back into the MC point of control. We've shifted the point of control a little bit higher, a little bit lower. And we are basically trading, and this becomes our range from the MC. Our range becomes this region right here. And so you're looking at, you're looking at a cap potentially in the December contract of about 24.71 down into 24.58.50. That's likely to be those are likely to be the margins in between which the market is likely to trade today. Coming into today,
Not expecting too much in terms of movement, of course, barring news. But on the open, I'm looking for an open auction. I'm looking for the market to actually be attracted down into the 6350 area, consolidate in here, and I'm looking for it to push higher. I'm looking for an impulse up, a continuation, and then sideways into today's close. So today I'm looking for a range of about 6 to 7 points, not very much. And I'm not looking for a trend today, although we have been pushing higher. We've got a market yesterday that traded inside of Tuesday's trading. We have a higher point of control, so values moving higher. So we're likely to test this high we left behind on Tuesday. But overall, I'm looking for it to poke through into the 70s, into the 71 area, and then just sit sideways into the close. That's what I'm looking for as a key test for today. If we don't move lower, if we start to shift up as a continuation of the overnight trade, I'm looking for us to push into that 71, 72 area and then to find initial resistance, looking for the market to test lower and then eventually start to break higher yet again and finish strong into tomorrow's trading. So if we start to move higher and leave the point of control behind, to test out of the last to test out of the drop from Tuesday, then the market's telling us it's likely to be moving away from the point of control, the MC point of control, and towards where the auction started prior to the North Korean news. So what we have here is several days before the market has taken back the news-driven event, which it often does. Okay. So that's how things look. Again, I'll be quoting December. You're looking at December charts right now. I'll be quoting December going forward. So when you see comments from me, I'm strictly looking at December, the December contract. Okay. Good luck today, and I'll catch you tomorrow morning. Take care.